just about more than half. If you add even scooter to it, more than 62% comes from motorcycle and scooter alone. And passenger vehicles are 11%, the LCV 7.3%, and truck and bus close to 17%. So the mainstay is motorcycle and scooter by India. We just move to the next, also a subsidiary of Triton Future Tech, which we call internally metals business, which is a backward integration supporting the other two verticals, the automotive vertical and also climate control vertical. Apart from that, it also has own addressable external market. So it is, let's say, beautifully placed with regard to either doing captive sales or also external sales. But you look at where we're looking at just the industry. Overall global demand we're looking at is 8.97 thousand crores. Indian 1,000 crores is the numbers are 8.97, and India is just on 1.35. So here we are small in this 1.35. Very little export. I think the more we see, the growth can be more. It's not dependent on any industry per se. It's across all. Plus, we have the ability through our subsidiary to sell external and exports. So this is a takeaway from this slide. If you look at the brass market side, which is again of relevance to us, in 1,000 metric tons, India is 190 compared to 1,260,000 metric tons globally. So we are still small, but we look at the bigger way, of course, is China, and through China will be other market. But India is still 190, and Triton Future Tech subsidiary is operating within the 190, where it's done ability because of its quality and cost. India's cost help, and also for our ability to generate in quick alloys. We can even go into the unaddressed export market, essentially to Middle East, because of the trade component. We can go to Middle East and Southeast Asia, which at this time we can strengthen further without having to go to North America and expose ourselves to all the tariffs. So that's one good thing which is there for us. Our growth, there's no, let's say, there's a limit only to our ability to hold inventory or funding. Otherwise, there's a lot of things which can be done in the future tech. I move to the third entity, which is room AC valves. We call it a climate control segment. So we're looking at the relevant portion is air conditioning production in India. And we are just going through and seeing growth, let's say, slow and steady, but sometimes it can even be confusing because it's a seasonal. But if you look at overall number, at least 10 to 15% growth we will see this year also. And last year was more than 20% increase or so. So we are looking at India consuming more of domestic driven ACs, affordability, and let's say people preferring cleanliness or hygiene. And also we look at the weather pattern itself. So India by itself is a big market for AC, and then we are doing climate tech just won't enter. We are poised for a real potential growth. But should this break out, then this can be a great, let's say, great game changer for us as a climate control unit and also for the group. We now move to internal to our company. We look at the consolidated revenue and EBITDA. So there we are seeing now the growth of 14%. Last year we grew 18% on the consolidated revenue, that is eliminating the intercompany sales. So last 3 years we have been growing close to 13% to 18% to 14.5%. So it's in a way we are looking at the component annual growth rate of close to 15% of last 6 years. No mean achievement because significant portion came from new businesses. So it's just to say that our faith in the new business are beginning to show. The sales has already been registered. Now we'll have to do improvement across and also strengthen the profitability for the entire group. So that's a task to be done. But if you look at the numbers per se, the sales growth itself is the big story, and then we have a lot of headwinds, which our chairman also spoke about, but we also talk a little detail. EBITDA level, which is 32 crores, we did last year also 31 crores, but there's the element of commodity at play, and if the volatility is too huge within a quarter, that's what we have got last year. Despite that, we are able to do equal or better than the previous EBITDA. In some ways, we call it we have resilience at place. Not in the big achievements, we have should have done 40 crores or so in EBITDA, but actually looking at it, the Q1 was bad for general elections. Q3 onwards was a little bad, confusing to everybody because of the US tariff, the impact at which way is going to go. We have weathered those, and through the internal strength that we have at the group level, we have grown from just about maintained 31-32 crores EBITDA, and the sales also grew from by 14.3% to close to 500, which was our aspirational number to achieve. We came so close to it, but somehow probably the Q4 was the tariff confusion was too much for us and for the industry as such. So we fell little short of 489, but we still will say we have done close to 14.5% growth over last year. We look at the slicing of the revenue by geography. India still is 95%. So we can hold to 95%, but the export market can grow. And using our subsidiary and holding company with a couple of products, let's say 10% marketing system, we'll be able to grow more of those. While India-led sales will continue because of our consumption pattern, because of our policies, and because of our resilience. But exports is where we will try to use it as a means of getting additional revenue with profit, also as a means of mitigating, let's say, impact on commodity or foreign exchange. We look at the standalone segment. We come back to now the holding company, which is automotive segment. We look at the standalone segment sales wise. Our truck and bus and LCV is about close to 32%. So about 1/3 of sales is coming from truck, bus, and LCV. Passenger vehicle account for 16%. And these are all comparable. When you're looking at the numbers per se, the value in truck and bus and LCV is more, therefore it is few, but number of valve base, we make slightly higher profit when we do tubeless, which is more into the car and the motorcycle. But truck and bus and LCV still as a value number is that it shows. It's not, even though it might be slightly degrowing 0.5% of the making way for tubeless, it still has its own relevance in our company and the product that we are selling. Now come to subsidiary metal segment, which is Triton Future Tech and EBITDA. There again, there's a growth of been growing from last 4 years, and predominantly the sales coming also from external. So it's not just about meeting the group sales, which sometimes maybe people might feel easy to achieve, but I can tell you it's tough because our internal requirements is far more stringent. So even to qualify for Triton Bus is very tough for Future Tech. So let's I'll say that being equal, whether it's the internal customer or external customer, quality being, let's say, topic which is close to everybody's heart, but there's no easy win for anybody. We're looking at just the growth for Future Tech metal segment from 248 crore 2 years back to 288 to 350. It's been growing year on year. And this the same trend will continue. On big account of other two companies growing. And also because external market, also we have been let's say investing a little in new alloys, are trying to hold on to the price so that even if it's a fall. So it means that our profitability will be better than what it is now. And the growth will come with more profitable margins. With climate control, these are sales comprising external as well as internal. So when you look at some of the slide, we look at 19 crore sale for this year of climate tech. Actually, 43 is a total sale, including intercompany sale. If you look at a sale last two, 22, 23 and 23, 24, 17 crores. And in 24, 25, and essentially coming out of H1 of 24 to 25, a sale went up to 43 crores. On EBITDA, we were able to reverse the trend from -4 to now +2. Again, the next ask is to say we're going to the positive PBT. Maybe we have a little bit of a positive EBIT in between, but our target for this year onwards is to look at making that company also profitable. So all the three companies firing full cylinder for the profit, the consolidate will be better. There is a composition of revenue by vertical. Why is relevant? Because the growth of metals, which is in the gray, which let's say for this year we're looking at 185, is commodity driven. Therefore, it's having a slightly lower gross margin. So as we see, the sales growth happens, but the profit growth has to be given more from Triton Branch Limited, which is automotive, and also the climate control, which is climate. So the piece which you are showing is 285 crores, which is the external sales of the total group, and 19 crores, which is Climatech. These two are sitting, let's say the cost impact is more on gross margin, also on PBT. Not to say the 185 crore coming from FutureTech is not. And FutureTech, in a way, it's dual role. Not only does it fire external sales and bring in sales at the consolidated level, it also ring fences the group with regard to supplying brass rod and coils at short notice at affordable price, and therefore ring fence also from foreign exchange and commodities. So if you look at the role type 185 crore, which is the external sales out of the total 300 crore we saw in the previous, it is two ways. Difference as well as to go to the market. So it's a beautiful vehicle that we have, which will sail us through. And then as we grow, other companies may have the shortfall with regard to metals, but we are having our, so that to major extent of our raw material, dependability raw material, availability of the price is rest assured because we are growing in-house. We look at the consolidated revenue as the pie chart as a percentage. We see the metal segment constituting more and more because the external sales is growing. The internal sales will be driven by what we can give. So if the holding company sales is little low, the internal sales buy from metals also will be low. So therefore, we're looking at an opportunity where in months where 2 months or 3 months where the Triton valves as an automotive is consuming less, FutureTech still the ability to go and sell in the market. So if you look at the sales of metals is close to 38%, and 58% comes from the holding company, which was 61% before. So slowly we see metal segment going lower, but we'll be happy to have climate control grow on its own. And when climate control grow on its own, the pie will be definitely much better, will be a better spread. It's all the three companies seeing not in 4%, maybe in climate control will be in early 2 digits or so. That will be a good side to have even for us and profitability also. Evolution of EBITDA, there is 2 weeks wait. First, we spoke about the 31-32 crores we held on. And as a percentage, the margin, we look at wholesale, is 6.6%. Slightly down from the previous 7.3%. But important takeaway again was Q1 and Q3 onwards. It will be little uncertain times with regard to even sometimes availability of raw material or availability of raw material at the price that the customer would pay. And this interest rate, and also with the merger of HDFC and the HDFC Bank. All this ensured that there are macroeconomic factors which we had to weather, which we did with looking more to plan B, plan C, which we activated. And with a little time about, and there's no time to say whether we would succeed or not. So it's in some ways it's not getting stopped, I would say, and then going progressing. And those sales were achieved. We could achieve 32 crores of operating profit, which is EBITDA, with a margin of 6.6%. Dividend payout, we are maintaining at 10 rupees per share because, again, looking at short-term and long-term interests of the shareholders, also the company's requirements are cash flow for the growth. Essentially, now we're going to invest more in capex. So it's the right mix of what could be shared with the shareholders. Either we investing in the company and then growing value for all the shareholders. So the board of directors took a call of meeting both short-term as well as long-term. Long-term, the more it stays, of course, the value for the shareholders will be more. So we thought we'll continue with the same rupees 10 per share as dividend for 24-25 to paid now. Return on capital and ROCE consolidated, we are around 8.3% now. We were 8.5% before, but significantly down 2.1% couple of years back because the brass was much more people fall and up. So the volatility is much more there. But we look at the steady state, despite the copper going up and down because of FutureTech supporting us and also because of our ability to buy brass bearing from market and then selling it with a view to getting it back. We took that extra call. It had its own impact on working capital employed, but we ensured that no customer line got stopped. We also ensured the sales were optimized from all the three entities. And we also ensured that the profitability of the ROC of 8.3 was maintained. Standalone return on equity, and this I will say read because it is presented from -2.7 to 7.7 to 5.2%. But the standalone return may not be the right number because what we spoke about, we are more interdependent now. So we look at the overall console level, then this return equity will be better than the standalone return on equity. The current ratio is about 1.1. So ideally, the banks would want us to be in the range of 1.05 to 1.2. Because there's a present thinking, the more it goes beyond 1.2, that means we are not utilizing it fully. So with the current portion of non-current loan getting added to the current liability portion, the new normal is 1.1, 1.15. So we are around the same level. So we are not deteriorated there at all. So it's showing good rates of time. Debt to equity ratio, we are 0.68 compared to what we were before tax on equity infusion, and we are held on to the debt level. And this is going for CapEx infusion also strengthening of working capital. So it's a good sign. And further this year we will have more revenues because we recently just got funds in as a share application money into our account, which will go its own level of allotment. So that will further strengthen the debt to equity ratio. Consolidated shareholders network, that's preserving networks for all the shareholders, all of us. From 72 crores, which were a couple of years ago, we went to 103 crores. Obviously, coming from a mix of profitability, also the equity infusion. From there, we have taken the target to 109 crores. This is net of the dividend payout, of course. So 109 crores is what dividend shareholders' money as of 31st March 2025. These are standalone. In the typically standalone, we'll tell only partial change, but the console is what we will look at. But here also we are showing 120 crores going to 128 crores. This is without the losses coming out of climatic. Therefore, it shows slightly better than what is in console slide.
Thank you. Thank you, Naresh, for that. We will now resume with the proceedings of the annual general meeting. There are 3 items of ordinary business. The first one is adoption of financial statements. To receive, consider and adopt the audited standalone and consolidated financial statements for the financial year ended 31st March 2025, and the reports of the board, including secretarial audit report and of the independent auditors thereon. The second ordinary business is declaration of dividend for the financial year ended 31st March 2025, 10 rupees, which is 100% of the on the equity shares on the existing 11,83,527 equity shares, and a proportional dividend of rupees 3.56, which was newly created on 22nd November 2025, totaling to rupees 1,18,95,790 rupees, which will be appropriated from the profit of the year. The third item is to appoint a director in place of Mrs. Anuradha Maruti Gokan, who retires by rotation and being eligible offers herself for reappointment. There are 7 items of special business. The ratification of remuneration payable to Messrs. Vishwanath Bhatt and Associates, cost auditors for the financial year FY26. Appointment of Mr. Parameshwar Ganpati Bhatt, practicing company secretary, as secretarial auditor of the company, to hold office for the term of 5 consecutive years, effective from FY26 up to FY30. Right? Revision in the remuneration and the terms and conditions of Mr. Aditya Maruti Gokan, managing director of the company. Revision in the remuneration and the terms of and conditions of Mr. Kutanda Bhimaya Appaya, full-time director of the company. There is the appointment of Mr. Kishore Mukund Saleto as a director and as an independent director of the company. The 9th special business point is increasing the borrowing powers of the company. And number 10, approval for material related party transactions with the subsidiaries of the company. The text of the resolutions, along with the explanatory statement, is provided in the notice circulated to the shareholders. Members who are yet to cast their votes may vote on the above resolutions. The results of the remote e-voting and e-voting during AGM will be reconciled, and the combined results will be declared later on. As per e-voting rules, the results will have to be placed on the website of the company within 2 working days of the AGM. Since the AGM is being held through video conference, we have requested the members to register themselves as speakers in advance before proceeding for voting on the resolutions. I invite those members who are registered as speakers to offer their comments and seek clarifications, if any, on the resolutions contained in the notice and the financial statements. He or she may do so now. I now request Mr. Vibhuti Bhushan Mishra to take it.
Thank you, Chairman. Before we go live for the Q&A session, here are some points to note for our convenience. In the interest of time, I request the speakers to be brief and avoid repeating the questions or comments made by the earlier speakers. Each speaker is requested to speak for a maximum of 2 minutes. Speakers are requested to mention their name, their DPID or client ID, and the location from where they are joined before asking the questions. Consolidated replies shall be furnished at the end by chairman and admin director. Members may also note that the company reserves the right to limit the number of members ask questions depending on the available time. In case of any shareholders facing any difficulties, they may reach out to NSDL helpline numbers. The floor is now open for questions, and now I request the moderator NSDL guys to unmute the speakers in the speaking order assigned. Speaker number 1, Yasvi Kothari.
First time people never ask questions before.
Moderator is there? Yasvi Kothari.
Sir, he's not there. We can the next speaker.
We'll move to the next speaker. Mulesh M. Savla.
Yeah, Mr. Mulesh Savla, please. Check. Yeah, moderator, can you confirm if Mr. Mulesh M. Savla is in the meeting and has some questions?
Yes, sir, he's there in the meeting. Sir, you have to unmute yourself and you can ask your question.
Mr. Savla, if in case you're muted, can you please unmute? Because we are not able to hear you. I'm able to see Mr. Mulesh Savla, but he's there in the meeting, but we are not able to hear him. Mr. Savla, can you please try and unmute yourself?
But tech support, I think he is not able to unmute himself.
Okay. Let's.
But he cannot unmute himself.
Okay, so in the interest of time, let's move to the next speaker and then come back to Mr. Mulesh. Connectivity issue. Okay, so we'll move to the next speaker and we'll come back to Mr. Mulesh Savla if it's okay with him. We'll come back to him after the next speaker, Mr. Gaurav Sood.
Gaurav Sood, HUF. Okay. Move to speaker number 4, Mr. Himanshu A. Trivedi.
Has Mr. Savla given any questions in advance that we can take up even though he's muted?
No, he mentioned in the email that he will ask.
He will ask directly at the. Okay, let's wait for a few minutes till the technical problem sorts itself. Can the tech team please help Mr. Savla to ask his questions? Is it possible that he can dial in on the phone or something like that? Is it possible? Does anybody have his mobile number? Can we contact him here? Okay, I think Mr. Vibhuti has his mobile number. I think we'll try to call him.
Sir, I think you have to connect your audio. I think audio is not connected. Mulesh, sir, you please connect your audio.
Hello.
I think Mr. Vibhuti is trying to contact him to see if he can resolve his technical problem.
Savla or
Yeah,
Kuthar.
Mr. Sam.
Kuthar is not there.
Naresh, are there any other questions that have come from any of the investors we can take up before we can? Yeah. Yeah. So ladies and gentlemen, what we will do is, while we are trying to sort out the problem with Mr. Mulesh Savla, who has some questions but is unable to connect, if we have received any other questions in writing from any of the shareholders, maybe we can take them. Any other questions, Vibhuti, that have come? Okay, so we do have a list of questions. Okay, so even though Mr. Himanshu Trivedi is not on the call, he had actually sent us a few questions. I'll read them out. These are the questions that he had sent us in advance. He wanted to know how many employees we have in our organization. What is the CapEx program for the next 2 years? Who are our competitors? Give us details of future plans of your company. Explain future pipeline projects. Okay. How much order book as on date? What is the market share in national international market? How many branches or plants in India and abroad? Let me know our company think over expansion service for plant and machinery. We're able to exactly understand the question. If possible, please send hard copy of AGM report. I think we have sent that to him. Yeah. He requested for a hard copy. Yeah. Okay. Total, how many plants in southern region, in particular in India as on date? How much profit sharing ratio is on the national market? How many employees strength in our organization? Okay, that's a repeat. How many projects? Okay. So, okay, I'll just take these questions from Mr. Himanshu Trivedi, who is not here in person, but who had sent his questions in advance. His first question is, how many employees do we have in our organization? At a group console basis, all the three entities put together, we have about 1,100 employees, which includes contract labor, trainees, and permanent employees, staff, and management team members. What is the CapEx program for the next 2 years? Yeah, I think it's a very good question. Basically, we are seeing growth in all the three verticals, which is our automotive vertical, our climate control vertical, and the metals vertical. In terms of CapEx, we will be doing only a very incremental maintenance CapEx in our metals business, because I think we've spoken about it before. I will say it again. We have been in the process of expanding our casting line in the metals business. Our current, I would say, casting capacity is about 1,000 tons per month, which is around 12,000 tons per annum. We are trying to double that capacity to around 2,000 tons, which is about 24,000 tons per annum in terms of our melting capacity in Future Tech, which is our brass mill. In terms of extrusion output, finished goods output, we are currently at about, we can do up to about 700 metric tons of output per month. So that's about 8,500 tons per annum is our current installed capacity. That capacity we will be enhancing to about 20,000 tons, right? In terms of finished goods, capacity. We will not require significant capex for the metals business, because we already have a good setup. The next question is about what is the, what's the capex in the other two entities. Okay, in climate control, we believe that once the quality control order comes in from Government of India, we will have a significantly higher opportunity to grow, right? So I think a lot of our investments over the next 3 to 5 years will be focused on the climate control vertical and the automotive vertical. I don't have a number to give you today in terms of the exact number, but I'll say on average, we see about 10 to 12 crores of capex coming in every year for the next, I would say, 3 to 5 years. So I'd say about 30 to 50 crores over the next 3 to 5 years, what I estimate in terms of capex. What is our market share? I would say in the automotive business, we have very significant market share. I would say about 65% plus. In climate control, our market share is still very small. We are at about, I would say, about 10% of the India market share today, but we see that growing because we are the only Indian manufacturer of those components, which are currently being imported from China. And there is a big move to localize the industry. So I believe that in climate control over the next 3 to 5 years, our market share will significantly grow to about 50%. How many branches do we have? It's all in the annual report, so I won't talk about it too much. We have 3 plants. We have some warehouses in different parts of India. And we don't need to have too many branch offices because we are primarily a manufacturing company. Answered most of the questions. Anshu Trivedi. We'll move on to the questions that Mr. Mulesh Savla has asked. Mr. Savla, once again, apologies that we are not able to hear you in spite of your presence, but thank you for sending us your questions in writing. Mr. Savla says, heartiest congratulations to the team. Thank you so much. We really appreciate your trust and your confidence in us. Your questions are: 1, how are we planning to increase our margins? I think it's a great question. I don't think any of us here in Triton are happy with the kind of margins that we are currently operating at. So there is a lot of work going on in terms of increasing our margins. I would say primarily 2 areas we are focusing on. 1, we are trying to explain to our customers why, our prices need to go up a little bit because, compared to the COVID year and now, if I look at it, a lot of our non-material related costs have gone up significantly, and the industry has been, I would say, a bit resistant to absorbing those increases, right? So we are pushing the industry. We are trying to explain to them. We are trying to justify the reasons why we need to increase prices. So that's something that, it's an ongoing conversation. And given the fact that, a lot of our customers are very well aligned to us and they're hopefully quite understanding, I believe that, we will see some traction on that front, point number 1. Point number 2, we are also working on a lot of EBITDA improvement projects, primarily centered around, increasing our internal efficiencies, right? Automating our plant, reducing our dependency on contract manpower and so on, which will also enhance margins, right? Number 3, we're looking at our product mix. Now we have certain products which have higher margins, certain products which have relatively lower margins. So the products like, the products that we make for electric vehicles and so on are relatively higher margin products. And we are trying to focus our attention on those products and scale up those product lines so that, we will have an increase in our EBITDA. You asked about QCO and new products like BMS valves, charging valves, electronic equipment. Okay. So I'll just explain to you regarding the QCO, which is a question which many people have been asking. So I'll broadly put it like this. In every country, a lot of the components that we manufacture, that is tire valves, valves for the air conditioning industry, and to some extent are metal products as well. Most countries have their own standards, right? Which means to say that if I need to export a tire valve, let us say to Germany, right? The Germans have their own standard. And for us to be able to sell our products in Germany, our products need to meet the German country standards, right? In India, hitherto, the government has not enforced a lot of the standards in our industry. And how does that hurt us? Our products are made obviously to a certain quality standard to the country requirement, in terms of the specifications. So for example, if you look at our tire valves, the valves have to have a certain life. There are parameters like, pull out strength, snap in strength, fatigue, how much fatigue the product can withstand and so on. Now, these standards, even though they exist in India, India has, we have our own standards. These standards have not been enforced hitherto by Government of India, which means that even products which don't conform to the India requirement, people are able to manufacture it, people are able to import it, and people are able to sell it in the market, right? Now, we have been telling Government of India that this is not a healthy practice because non-standard products can pose a risk to the consumers. In our case, it could be a safety risk. And we've been telling government that just like tires have a regulation, wheels have a regulation, but valves, the regulation has not yet come. So now the government is actively, consulting with us and the industry, and they are planning to enforce what is called a quality control order, a QCO. What does it basically mean? It means that all the products in the country that are sold need to conform to the India quality standards, right? That's a very healthy sign for us because it will ensure that the non-standard products, the very cheap products, the risky products, right, will be removed from the market. There'll be so all these manufacturers who are producing these kind of products will have to upgrade their quality and meet the country requirement. So that will put us at a tremendous advantage because we're already there in the market for a long time and we're already conforming to all the standards that the country requires. So this is going to be very, very positive for us, both in the automotive business as well as the climate control business. In both domains, the government is proposing to bring in quality control orders. So this is something that is going to help us. In terms of numbers, how much and how quickly will it help? I'll put it like this. We believe that the quality control order for tire valves is about 3 to 6 months away. The quality control order for climate control also is in that range. I would say about 3 to 6 months away from now. So once those quality control orders are notified by Government of India, the industry will be given about 6 months time to comply. So let's say about a year from now, we expect the full, I would say, enforcement of quality control orders. And that would be giving us a significant edge in terms of our order position, in terms of our sales. This will give us a tremendous advantage. The next question is about the capex plan for current and next year. So current year, I would say we're at about 10 crores of capex we expect to spend this year. And like I said, over the next 2 to 3 years or even up to 5 years, I would say on average, 10 to 12 crores of capex is what we anticipate. So those are the questions from Mr. Savla. I hope I've answered them. Do we have any further questions, Vibhuti? No? So since there are no other speakers, we can just check once more if Yashasvi Kotari or Mr. Gaurav Sood have subsequently logged in. In case they have, we can take their questions. If not, we will move on.
No, sir, it's not there. The academic list of is there now.
They're not there? Okay. All right. So I think we'll move on with the meeting. Right? So members who are yet to vote are now requested to cast their votes using the e-voting facility of NSDL. E-voting facility will be available for 30 minutes more after the conclusion of this AGM. The results of the remote e-voting and the e-voting during the AGM will be declared on receipt of the scrutinizer's report and placed on the company's website, and it will also be sent to the stock exchange. Just a point to note, as per the company's management and administration rules 2014, results have to be declared by the chairman or any other person authorized by the chairman in writing. Right? On behalf of the board of directors, I thank you all for participating in the meeting. I hereby declare the proceedings of this AGM as closed and wish you and your family to stay safe. Thank you so much. And I will call the meeting to an end. Thank you. I believe you can.
Yes.
Yes, thank you.